Good morning, everybody. Hey, welcome to Monday. It is August 22nd. Hope y'all had a great weekend. As we look at where the markets are going to start the week, as well as where they kind of ended the week last week, we'll do that and more when Dave joins us here up next. Before we do that, though, let's not forget that when it comes to our investments, there's a lot of things out there that we cannot control. Taxes, for instance. However, you can control how much risk you have in your portfolio, but you need to know how much risk you have before you know how to control it. Give us a call at 863-382-0037 to schedule your core retirement design phone consultation. With that, we've got Dave coming up next.
5.7 Light FM. It's MJ there, and beat it. I said, beat it. Better yet, let's just see if we can't beat the market this morning. Looking at the futures won't be too terribly hard. It's 8:39. Let's check in on money and see what's going on with your world this morning. Go to Sebring's very own Phillip Statler from Statler Financial Services. Phillip, I trust you had a good weekend.
I did, Dave. I hope you did as well. And man, we just had the week was just a tough week last week. And I got to say, Dave, it's not looking much better this morning.
It sure as heck is not. I mean, to reset the table, Friday's close, the Dow was down by 292 points. Standard & Poor's was down by 55. NASDAQ was down a full 2+%, down 260 points on Friday. And I'm looking at a lot of red ink on the futures this morning, and both of us were trying to noodle it through. There really isn't any one news item that's prompting us to go down. Just kind of a generally unsettled state, looking at the world as it is. Our inflation rate not completely under control. You got a tidbit out of Europe with a projection as to what Great Britain's inflation rate could be next year, and that is enough to make a person drop their false teeth.
It really is. Citibank came out with their projections for the inflation in the UK. And it's scary, Dave. They expect inflation in the first quarter of 2023 to be like 18%. And it's based on the energy sector, right? Because they regulate their energy and they put caps on how much tariff can be charged. And that current tariff is 1,971 pounds on the average household per year. And they're fixing to up that October 1st. And there's expectations all over the board, and cities is probably actually the lowest at 3717 pounds, which for you and I would be almost $4,400 a year per household of tariff that can be added.
That's for the privilege of buying the stuff, not necessarily buying it.
That's what it sounds like to me. They say it's a tariff. Not just the cost of energy, but the tariff that can be laid on that cost. And actually Citibank is the lowest expectation out there. There's another Cornwall insight. They said they think the cap's going to get raised to 4,266 pounds, and another firm forecasted 6,000 pounds. Huge numbers that, man, that's just going to put a lot of pressure on the UK.
Son of a buck. That doesn't help. Then you go to the other side of the world, and China is already in a recession and is busy trying to stimulate their way out, while the rest of us are all raising interest rates and taxes. China's over there dropping their stimulus interest rate down to try to get their economy moving again. We were talking before we went on the air. I don't know how to look at this. Maybe the Chinese are about 6 months ahead of us in the recession, and now they're trying to stimulate their way out. But it's almost like we got two completely different worlds going on at the same time, don't we?
Yeah, it really does, and so we continue to just hope, right, that our Fed will do what needs to be done and not overdo it, right? So that maybe we can manage this through.
And quite frankly, the odds looks like, judging by the market's judgment of the thing, is that they're going to probably give us another pretty good-sized interest rate bump, because generally that's the only anticipatory reason I can think of for things to go down. Maybe they all put two and two together and figured out the Inflation Reduction Act basically just poured a whole pile more money into the marketplace and won't take any out until after the election. And that's just going to do nothing more than make the Federal Reserve want to be more aggressive on interest rates, I've got to assume, because we have to take money out of the economy in order to control inflation.
Well, and I think the other thing that could have happened, looking at that bill, they've really looked at it now and determined how bad the tax increases are inside of there. And that could have put a lot of pressure on the markets, because that's just going to compound the effect of inflation. Because you and I talk about all the time, corporations do not pay taxes, right? Everybody thinks they do, but they don't. They pass it on to you and I, the consumer, as a price increase. So that tax will end up costing you and me down the road when they implement all this stuff. And so that's going to be problematic. It's not going to help us any when we're sitting here facing a recession.
Absolutely. It's an old Paul Harvey line, but it's actually true. Corporations don't pay taxes, they collect them. But it's a relatively invisible way for the government to raise taxes without telling us about it, because they just whack the corporations and then we complain about the corporations raising prices on us.
Exactly. And so, it's one of those things that it's going to be a big deal for all of us. And the question is, how soon will we start to feel that effect?
Absolutely. We are at the end of earnings season right now. We don't really have a really strong picture as to what the earnings season has looked like yet. I'd imagine we're going to get one of those summary articles as to how well the market did over the next couple of days, now that we're pretty well done with the peak of the earnings season. Tidbits are what we got this morning. That whole thing with Bed Bath & Beyond that we talked about last week just seems to be getting worse. Headline on one of my tip sheets is, memo to Bed Bath & Beyond investors, Ryan Cohen is not your friend. Do you think they might be saying no kidding about now?
Yeah, no kidding. That's because they all thought he was their friend, right? When he went out and bought all those options and pushed the price up, and then all of a sudden he dumped his whole the whole section that he owns. So, but that's not the only problem Bed Bath & Beyond has, Dave. They my little blip says that a lot of suppliers are starting to halt their shipments to Bed Bath & Beyond due to unpaid bills. So they're really starting to get shaky now. And when suppliers get concerned about you paying their bills, that's that's a big deal, because if one does it, then the others will start to follow suit. And all of a sudden there'll be no inventory for Bed Bath & Beyond to sell.
Oh, yeah. The audible wince you heard was that when that kind of news gets out into the general public, that's exactly what happens. All of a sudden, all the other suppliers call for cash on the barrel too.
Exactly. And so, we saw them fall on Friday 40%, down to $11. Well, they're down another 16.5% this morning, right now trading about $9.21.
This is simply not working out to their favor at the moment. Other corporate tidbits you got for us this morning were absent any reports, I'm assuming.
Yeah, we are. I have no reports. It's all just tidbits here and there. AMC Entertainment is another one that's come across my ticker. They're having a lot of, their stock's getting tanked this morning, but I don't think it's anything because of what they're doing. It's more about the industry, right? So one of their Regal Cinemas came out and said that there's a good chance that they are considering filing for bankruptcy. Obviously, when one person in that industry, which is a pretty slim industry, starts to say that, it affects everybody else in that industry. So we've got AMC trading down 40% this morning.
Ouch. I saw the Regal Cinemas announcement. I was figuring that would probably cause a sector tank, didn't it?
It really has. And that's, there's not many people in that sector, right? So it's going to start to play havoc.
Understood. Resetting the table for the morning. We had a down day on Friday. Looks to me like we're not going to have a much better day on Monday so far. Anyway, 45 minutes before we start trading. Phillip, what's going on?
It is, it's a down day. It's going to be a downer day all day, it looks like. We got the Dow down 1%. That's almost $340. The S&P 500 is down 1.2%. That's $50. The NASDAQ 100 down 1.5%. That's almost $200. As we continue to watch the VIX go up about almost 5% this morning. On the other side of the coin, it's not much better, Dave. We got silver. Man, it's just getting hit again. It's down 2.3%. down below 19. It's at $18.62 an ounce. Gold's down 1.2% to $1,741 an ounce. Crude oil is up from where it was when we talked Friday morning, but down from close. It's down about 0.25% to $90.22 a barrel right now.
Well, shucks, I don't really like seeing the 90 as the first number there. Overseas markets, it was a mixed bag in Asia. No great movement either side of the zero mark at the close this morning. Europe is looking at our futures and saying, whoa, Nelly. Germany's trading down by 2% halfway through their trading day, to give you a picture of what Europe is looking like. And I'm still seeing an inversion, a small one now, between the 2 and the 30-year Treasury bond yields. So don't have any good news in the bond market either. Phillip, if I was to look at my retirement on a day-by-day basis, I'd need a lot more Tums in my life. How do I get a hold of you to get a plan so I don't need to worry about our chats every morning?
They can give us a call at 863-382-0037 and schedule their core retirement design phone consultation, where we help to make sure that they're on the right track for the retirement they always dreamed of. And then check us out this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here again tomorrow morning. Phillip, thank you so much. You have a good day. We'll see you then.
All right, buddy. You too.
Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today as we start off this week. Hey, we're here as a resource for you. Give us a call, schedule a phone consultation, answer your questions. That's what we're here for, to be a resource for you, your family, and friends. 863-382-0037. Have a great day. I hope you'll join me again tomorrow. Bye now.